Good evening. It's Clive Maund here of clivemaund.com. It's the evening of the 17th of September, and the reason for this evening update is just to pass a quick commentary on following the Fed rate announcement this afternoon. What happened is the Federal Reserve basically tried to please everyone by doing a half-point rate cut. Now, the interesting thing about this is that the stock market rose for several weeks quite strongly this month into the rate cut, as it was almost universally expected. So the stock market rose into a rate cut, and partly on the back of that, the precious metals and the precious metal stock indices rose even more. And so I consider this, because it was so heavily discounted, I consider this rate cut announcement today to be a sell on the news event. And so it's interesting to observe that there was a big build-up in commercial short positions in gold and silver ahead of this. And we saw a bit of a smackdown in the precious metals sector yesterday. And I'm of the opinion that we're going to see a correction. Now, a big reason for a correction at this juncture is the fact that the precious metal sector is so tremendously overbought at the moment. So we'll start by looking at a 20-year chart for GDX. Now, I thought that the sector would maybe run up a bit more because the HUI index hasn't quite reached its 2011 highs, but it's got close enough, and we can see on this 20-year chart for GDX that we're going to look at now with the HUI GoldBUGS Index at the top of it, that the HUI has virtually got to the resistance at the 2011 highs. But if we take a look at the GDX, which is the main part of the chart, and in particular the MACD for the GDX Market Vectors ETF, we look at the MACD indicator at the bottom of the chart, we see that it's massively overbought. It's a record, and it's a record by far. So it is so overbought now that I would be surprised if we didn't see some kind of reaction, or at least a consolidation. So now what we're going to do is proceed to see on the next chart, which is, I think, a 6-month chart for GDX. It looks like it will probably correct back towards its 200-day moving average. I don't think it will get that far. It will probably get back to that strong support level that we can see on the chart. But if this happened, it would be a very healthy rebalancing and would set the sector up for renewed advance. And a warning that a correction of this nature is in the offing is provided by the RSI indicator at the top of this chart, which has been showing a hypercritically overbought condition all this month, and that actually started late last month. So it seems highly likely to me that the sector's going to correct back, probably at the same time as the broad stock market, correct back towards, but not to, its 200-day moving average to ease this overbought condition. And lastly, we'll look at another circumstantial indication that this may be so, which is the chart for a silver stock, a mid-cap silver stock called Guanajuato Silver that we've looked at several times in the recent past. And seeing that Guanajuato had hit a target at the weekend, we sold it on Monday morning, first thing, right at the top, and at that target trend line that you can see on this third chart. And it started reacting back quite heavily this week, and it kind of suggests that Guanajuato will continue probably to correct back to the strong support level shown, where we will probably look to buy it back. But this is circumstantial evidence that the sector as a whole, because there are other charts like this as well, of course, this is circumstantial evidence that we're probably on the verge of a needed correction, which will set the sector up for renewed advance. And I'm I concur with Mike Maloney. I watched a very interesting video by him yesterday and by a young colleague of his called, I think his name's Alan somebody or other, but I can't remember his surname. But I totally concur with Mike Maloney that for gold, silver, and the entire sector is going much, 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 much higher, especially as we have hyperinflation on the horizon. So this correction is a needed development, and it was set the sector up for renewed advance. So if you want to read the details of strategies to deal with this correction, go to clivemaund.com, where an article was posted today in which we also looked at NVIDIA as a possible short, and also looked at the broad market itself. So that's all for now, and we'll be keeping a close eye on this in coming days. And if you want to read more about it, go and subscribe to clivemaund.com. Good night, or good day, depending on wherever you are.